This is Frank Reynolds from Frank Reynolds Company with our May 2013 Economic Update. In this video, we'll discuss a few of the events that drove the markets in May. We'll also look ahead at what might happen in the days and weeks to come. Please be sure to review the required disclosure statements below. It is the law. Markets were able to end May in the black despite some weakness in the last days of the month. For the month, the S&P 500 gained 2%, the Dow gained 1.9%, and the NASDAQ gained 3.8%. Earlier in the month, the Fed announced a general plan for tapering its quantitative easing program as the economic recovery continues. Markets became volatile in the last 2 weeks of the month as investors processed that news. Fed Chairman Ben Bernanke clarified that the Fed will not be rushing to exit, but would tighten monetary policy cautiously as economic conditions improve. Many analysts believe that the Fed's bond buying program has been propping up the markets, meaning that a withdrawal of Fed support could cause the markets to slide. While it's good news that the Fed isn't shutting down its bond program immediately, we can expect additional volatility in the coming months as markets prepare for the end of the easy Fed money. Overall, economic data was positive in May. We got another look at revised first quarter GDP, which came in at 2.4%, down from the 2.5% initial reading. The downward revision was expected due to some slower inventory growth. Consumer sentiment for May did beat expectations, reaching the highest level since July of 2007. On the downside, though, the last weekly jobs report for the month showed an increase in unemployment claims, meaning job growth looks to have been essentially flat over the last 2 months. As first quarter earnings season wraps up, we can see that it was a pretty average earnings season and nothing to get too excited about. Profit margins are slightly up for S&P 500 overall, but once you take out the financial sector, the margins are down for all other sectors. While about 2/3 of the S&P 500 companies were able to beat profit expectations, only 40% were able to beat revenue expectations, meaning that demand is still soft and companies were able to achieve profits by doing more with less. Looking ahead, we may see continued volatility as investors digest this economic data and continue to monitor the Fed actions. Markets have responded well to positive economic data earlier this year, but concerns about the Fed may cause investors to react in contradictory ways. As always, we'll be watching closely and looking for investment opportunities as the markets move. You can visit our website to hear our latest series on women and money. You can do that by going to www.frankreynoldscompany.com, which is all one word, Frank Reynolds Company and then .com. Once again, this is Frank Reynolds with Frank Reynolds Company, signing off for the month of May 2013. I hope that you found this commentary interesting and informative. If you have any questions about what you heard in this update or would like to discuss your personal financial situation in more detail, please give us a call at 866-248-3094. We'd be happy and honored to talk with you.